Okay guys, I'm really excited to bring you this video which will give you an idea of how to trade using two major strategies combined, which should give you twice the power. Now I'll explain what I mean by that. You might have seen my video on divergence, hidden bullish divergence, where I showed you that trading divergence can give you results like this. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 wins, and we had a loser here trading hidden bullish divergence. And trading regular bearish divergence, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 losses and only one win. So the whole point of that video was to show you that when you're continuation trading, or you're continuing to trade in the direction of the trend, it's well worth trading a system which takes advantage of that trend continuation. And the problem with regular divergence is that you're often going to not predict which way, when the market is going to turn, as regular divergences often get proved wrong, which I'm sure if you've been trading any length of time, you will have found out to your cost. But this set of results here is unusual because no system, I mean, this was a lovely trending run which produced all these winners, and I showed you one trade in which I took, which gave me some profit using this whole trading idea. But no system is going to give you, consistent wins regularly without you considering what is happening in the market and using other confluences. Now, if you're trading in line with a trend, and if you took a buy trade anywhere from here to say here, if you stayed in the trade long enough, you would have made some profit. And that's the advantage of trading continuation trends. But it's unusual where you see the market trending upwards so smoothly like this, which would give you this lovely set of results that we recorded here. And often markets are doing this kind of thing, and then they're doing this kind of thing, and they might do this. And it's never as smooth as what you can see here, or it is occasionally, but you're very lucky to see this kind of really nice kind of higher highs, higher lows, higher highs, higher lows. This is such a lovely example of a market which, except for this point here, actually, it sort of goes level and trends downwards, and that's where you get this loss. But then it kind of, and in fact, it keeps down here, and then you kind of get that pattern back again. So this is very ideal, and we don't always get this kind of nice flowing higher highs and higher lows. And even here, you saw there was a kind of disruption. I don't think it made a lower low, but it came very close and would have had quite a few of us panicking at that point. Had we been a buy trade, we might have thought things were going against us. So having said that, I'm going to show you. So we've got another system of trading where we purely look at price action. Now, the whole idea with the price action system of trading, which I covered earlier in a previous video, which I showed you that one of my favorite systems is you wait for price to, again, you're trading continuation trades. You're trading in line with the trend, and you see where the trend reaches a level. You get this push phase here, it reaches a level, and then you get this pullback phase, and then most traders are trying to get in at a point which makes sense and which has strength. Now, obviously, we don't know if this level is going to hold, and we wait when we're trading price action to see if this level is broken through. And in fact, it comes up here, there's a few small bull candles, and then we break through, we break above, and we know now that this area of resistance where we got this supply coming in, the demand exceeded this and pushed prices up higher. And then market came down to retest this breakout area. So this is a breakthrough and retest zone here. And as price action traders, we'd have waited for a confirmation that price, well, what we might have done if we're on the 4-hourly, we'd have gone down to the 1 hour and we would have looked in microcosm as price came back here and retested this level here, and we would have seen this double bottom here, and we would have probably have got in here and hopefully have made the most of this move to the upside before we hit this next level of resistance here. And so that's how we trade with price action. So what I'm suggesting to you now is to take these two great systems, this price action breakthrough and retest system, and we take the hidden bullish divergence system, and to really make sure of when we can get into our trades, use these two systems in combination. So I'm just going to take this area as a perfect representation of how you might use these two systems. So now I've got this 2-period RSI here. So I've got a 2-period RSI, and we can see that as the RSI basically mimics price action. So we can see here that as price comes down here, we get this spike downwards in the RSI, and then as price moves up here, we get this movement upwards in the RSI. Now, price comes down here, and we get a downward spike. There's a flick upwards, and we get this upward spike. And so far, and what we can say is this spike upwards is lower than, so this spike upwards was lower than this spike upwards, and we can see on the RSI, the spike here is lower than this spike. And just so we don't get too cluttered up with arrows, I'll take some off. And then we can see now that price comes back down here, and generally we can see the RSI coming down. And finally, price breaks through, and we can see price breaks upwards here. And if I just take this off, and if I hover my crosshair over this this area here, you can see the RSI is 95.27. At this point, if you look over in the data window, you can see 95.27, and price has made a higher high than here, where the RSI is 99.54. So the RSI is 95.27, so it's made a lower high, while price has actually made a higher high. So I don't know if you can see that. The RSI here, let me get my tool back out. My drawing tool, that is, before anyone complicates that one. So we've made a lower high here to here, but price in the same area has made a higher high. So this is regular bearish divergence. And now I was saying before that you can't really trust regular bearish divergence, but occasionally it works out. So this is an area where it did work, where the indicator was making lower highs and price was making higher highs, and then that tells you that there's a bearish divergence in the market. And indeed, you saw price come back down. Now we're looking at a continuation trade here, and we're looking for price to confirm our price action idea. Now our price action idea is price reaches a level, bounces off it, breaks through it, and then comes back to retesting that level before hopefully flying off in continuation of the original trend direction, making higher highs and higher lows. So where's the hidden bullish divergence that will confirm that? Well, if you look down here, you can see that the RSI here made a lower low here. So price was making lower lows while it was making higher lows here. So if you look at the equivalent low here, it made a higher low here. So price was making higher lows while your indicator, the bottoms, were making lower lows. So that is confirmation of bullish, hidden bullish divergence. Now, because we are wanting a signal of when to go up and whether our idea is confirmed. Now, if you were price action trading, you would wait for a double bottom on a lower time frame or on the current time frame, and you do in fact get that double bottom here. You see price. Now I'm going to zoom in a bit because that's a little difficult to see, so you can see exactly what I'm saying. And we'll see if I can get in that other lower low. Bear with me while keeping this visible. I want you to see the divergence and the price action idea. So if you were trading price action, you'd see that you'd reach this level, and then as you broke through this level, that would confirm this as a higher low, and you'd break up to this point and you'd be looking for a retest of this zone here. And I draw the zones. I'll show you exactly how I draw these zones. So I wait for this high point where price drops away, and I go to the upper wick of the high candle, and that's my zone. And I just extend it outwards to the right hand side. So when price comes back and touches this zone and then closes in this zone, I know I've hit this zone. Now price has come down. Oh, sorry, excuse me. So I know that price has come down into this zone, has touched the zone, then closed in the zone. Now it might come down further. As long as it doesn't breach this low and close below this low, I could have a wick below this. But if it doesn't close below this low, if it closes anywhere here, I know that this trend is still intact for my purposes, and I could still take that trade. But what I'm essentially looking for is a signal in the market that my zone, if I'm a price action trade, has been respected. So I see price digs into here, starts to come away, then digs in again, and then I get another rejection of this zone. So I get a pin candle here, and I then get another pin here, but the close is up. So that's telling me. So effectively, I've got a double bottom bounce. Now, if I go to the 1 hour, I'll just drop a vertical line in so we can immediately zoom to that area. So there we are, and we're looking at this area here. We're looking at this area and this area on a lower time frame to confirm our double bounce. So if we go to the 1 hour, we can see here, we're on the 1 hour chart now, we can see that price has come back down, hits it once, comes down a bit like a plane landing, another bounce. So that's one bottom, and then another bottom, and then up again. So it's come into the zone. We get a nice pin candle there, rejection, comes down here, and then we get this rejection up to here, and price then flies away. So that's essentially what we're doing from a price action point of view. Now, a lot of price action traders find it hard, and in fact, any trader finds it hard to know when that signal is a valid one and when to pick it up. Well, now this is where combining two systems comes in, because we can see now that our indicator has made a lower low here, and then it's made an even lower low here. And this lower low relates to this candle, and this lower low relates to this candle directly above it. Now we can see that even when the RSI has made its low here, we can see that price does come down further. Now, that's in the nature of things, and nothing is ever 100% accurate. But what we know is that relative to this low, price has made a higher low while our indicator has made an even lower low. So this is the discrepancy. So this area is the discrepancy. So we're looking at this area, which is a discrepancy in relative prices here to here. Now, the other thing I like to see with a price action bounce is that when price reaches a level, as it does here, and then bounces upwards, I like to see a gap, a nice big gap underneath before it comes back down. And the bigger the gap, I always find, the stronger I find this enables me to identify this true bounce off this level and a true move, so that all the supply has been taken out by this move upwards. So we can show that demand has outstripped supply and price wants to push up. And so I'm looking for that gap here and this strong push, which is telling me that this level has been well and truly taken out. Now, when buyers get in here, they don't always get in. They don't all get in. There may be a lot of buy orders still sitting around, and so the market comes back down to scoop up these buy orders, and then we know that this region here, this region of supply, has been taken out. So we're fairly confident when we see confirmation of this buy energy coming back into the market with this double bounce here. We know now that we can get in, and this additionally has been confirmed by this hidden bullish divergence. So we know there's a lot more upward energy in this market than price action is actually showing us. The price action is showing us to dig back down into this territory here, but we know because of this hidden bullish divergence that there's much more upward pressure than you can see automatically from price action. Now, the only way that's happening is because of the math that makes this indicator work in the way it does. So those people that say, "Oh, I'm pure price action," or I'll only use indicators. Well, look, this is a prime example why you should be using both. This is a bit like those people who look for a fundamental reason for markets to go in one direction and then look for the price action confirmation. And this is a similar kind of affair here. So, as if to emphasize the point, now here's another one. So we can see here that price has bounced up and surpassed. In fact, I'll go back just so you can see the overall price action. Now, for some reason, I can't get rid of that. Okay, I've done that. So I'm just going to zoom out a little bit. So just so you can see the overall price action. So we know that the market's come down, gone up again, so it's made a higher high. And we know the minute that price penetrates this level, this high, we know that it's made a higher low. So we know the trend is intact, and that's another reason for breakthrough and retest trading. It confirms that the trend is intact by its own very nature. So we see it comes up to this level here of supply, and supply then comes into the market, pushes price down, and as price action traders, we want to see, is price going to penetrate that upper ceiling? And yes, it does. It breaks through it with force, and we like that. And then it comes down, hits our level here, and then bounces back up. Now, if we're aggressive traders, and we could see that this divergence, hidden bullish divergence, has occurred, we might take a buy at this level here. Now, if we didn't have this as price action traders, we would want some confirmation that price was going to go up. So we might have waited to here, seen this bounce here, and then we would have got in here on a buy trade with our stops somewhere under this level here. And either as a price action trader or as a divergence trader, this would have made sense, this particular trade. But when you combine the two, can you see how powerful that is in terms of confirmations, in terms of giving you confidence? And in fact, we had two divergences here. We had this divergence, and this was almost, in fact, it wasn't quite a divergence because price, well, it was. If you took price from here to here, you can see that price has made, or from here rather to here, you can see that price has made a higher low while your indicators made a lower low. So you've got a double example. So you've got two divergences there. So if you were a cautious divergence plus price action trader, you'd have got a second confirmation both from price action and from your indicator signal. So I hope this is making some kind of sense to you guys now. And just to drill it in, I'll go a bit further. Now let's have a look here. So in line with the overall market direction, so we're going to trace this up and see a higher highs, higher lows, higher highs. Now that probably counts as a higher low, a higher high, an equal low, and then we've got this, whether you'd count that as a, and then you find prices moved up here, it's come down here, made a lower high, and then it's come all the way down here, and now you're looking to see as, so you've made a lower high, and you've made now another lower, you've made a lower low, and then you've made a lower high. So you're thinking, well, what's happening here? Is there anything from a price action point of view or from a divergence point of view that you can use? Well, if you extend this area of resistance that was then support, and you extend it outwards, you can see that that area is still causing some trouble to price. If I'm taking it out as far as I can, now I'll just make it a bit bigger. I don't know if you can see this. It might be difficult to see it. So I'm just going to change its color so it's a bit more visible. Let's make it a dark orange. So that makes it much more visible. So now we can see that price was resistance here, support here, support here. It was now resistance here, resistance here, resistance here. So as price action traders, what are we looking at here? We're seeing price come down, bounce off here once, bounce off here twice. Then we see this engulfing candle here, rejection to the top side, engulfing and pushing back down and creating a lower low. And at the same time as divergence traders, we see the indicators making higher highs, while price, if we take it off this level here, to both to here makes a lower high, and to here makes a lower high. So either of these would have been good places to get in, and we've also, from a price action point of view, got a double top bounce, and that would have been a great place to get into a trade. You would have got in at the bottom here, stop would have been up here, and you've got 2, 3s and 4s to 1s here. And as if that wasn't enough, you can see that price once again came along to this level and created a double top here. So it came to this point here. It lapped the top. Now, whenever I see price come back up, and on a higher time frame, this would have been a pin candle, and this would have been possibly also been a pin candle. And when you see one pin candle being lapped over the top by another one. You can see that's a deliberate move on behalf of those sweet market makers to take out any stops that are sitting there. So if we just quickly flick over to the daily chart, we can see that prices come down here, and you can see this candle here was taken out. The top of this candle was taken out by the top of that candle, and we got ourselves a double top. And then what happened to price? Price then fell away rapidly there. And at the same time, we go back. This is the only time when I would take a regular bearish divergence is if it's in a downtrend. So normally speaking, you take regular bearish divergences in an uptrend to signal when the market is about to turn and go lower. So normally speaking, in this kind of situation, your indicators going up with the market, and then it suddenly doesn't make a higher high, but makes a lower high, and then that signals that the market is going downwards. So here it makes a lower high. So, and you can see that happens here. So the market's coming down, and the market makes a higher high. So the price gets up to this high, but you can see the indicator makes a lower high. And in the context of a downtrend, overall downtrend, that is when I would take a regular bearish divergence trade, or in the context of an uptrend, when I would take a regular bullish divergence trade. And that's the only situation where I would do that. So I hope you found that useful, and that this method of trading is something you will use, and to good effect, because I can assure you, if you're using two different types of strategies and you combine them, you're getting the positives hopefully from both of them, and your trading will become more confident and more accurate, and you'll be able to see and time your entries in a way that possibly you wouldn't if you're just using one of those particular trading techniques. So I'll see you in the next one. I hope you enjoyed that. Now, I just forgot to say, if you did like that, learned something new, would like to receive more videos, please like and subscribe and share, and that helps me have the encouragement to make more of these. So see you on the other side.